So, what happens when a financial technology giant, a real titan of the industry, watches nearly half its value just vanish in a single day? And this isn't some hypothetical scenario. This is the real story of Fiserv's massive stock collapse. And we're going to dig into exactly what went so wrong.
Okay, so get this. The date was October 29th, 2025, and by the time that closing bell rang, Fiserv's stock had absolutely plunged. We're talking a staggering 43.9%. For a company this big, a drop like that isn't just a bad day at the office, it is absolutely catastrophic.
And to put a number on that catastrophe, we're talking about over $30 billion in market value just wiped out. Think about that. That's more than the entire GDP of some countries. Gone. In just a few hours.
So yeah, this was way more than just a dip. It was a financial shockwave. And it leaves you with one big question, right? How does a company that seemed so rock solid suffer such a monumental collapse?
And you gotta understand, this wasn't just a bad day. It was a historic rout. The crash sent the stock price tumbling down to a level it hadn't seen in over 5 years. Just like that, years of gains were gone, and investor confidence was completely shattered. But here's what makes this whole story so fascinating. It's the disconnect. Right before the crash, Wall Street was, they were all in on Fiserv. The consensus rating was a strong buy. Get this, 28 analysts said buy, and only one single analyst said sell. So when you have that much optimism, the crash, it hits that much harder. It's just jarring. So what was the trigger, right? What could possibly cause a sell-off this huge? Well, it all came down to one thing, the numbers in their Q3 report. This was a classic case of expectations versus reality. Analysts were looking for adjusted earnings of $2.65 per share. What did Fiserv deliver? Just $2.04. They were expecting revenue of $5.36 billion. The company came in at $4.92 billion. These aren't just little misses. These are huge, significant shortfalls right across the board. And if you really want to see where the problem was, look at organic revenue. That's, the key measure of how the core business is doing, without any acquisitions, muddying the waters. Well, that growth engine just completely sputtered out. It went from a really healthy 8% growth in Q2 all the way down to just 1% in Q3. That kind of sudden drop is a huge red flag that something is seriously wrong. And look, even the company's own leadership wasn't trying to spin this. The CEO, Mike Lyons, he was pretty blunt about it. He said the results were just not good enough. He even admitted that their old forecasts were based on assumptions that were, and this is a direct quote, objectively difficult to achieve. Not exactly a confidence booster. So, with your performance in a total freefall, what do you do? Well, your response has to be just as dramatic. The fallout wasn't just about the stock price. It forced Fiserv to completely overhaul, everything. Their whole strategy and their leadership team. Okay, so they immediately roll out this new strategic plan. They called it One Fiserv. And the goal was pretty clear. Right the ship and fast. It's built on 5 key ideas. Getting back to focusing on clients, really pushing their Clover platform for small businesses, driving innovation, using AI to be more efficient, and, maybe most importantly, being way more disciplined with their money. And this wasn't just a bunch of talk on a PowerPoint slide. The company announced a massive leadership shakeup. We're talking 2 new co-presidents, a new CFO they actually poached from a competitor, and a new independent chairman. The message they were sending couldn't be clearer. The old way of doing things was over. But, fixing things on the inside is only half the battle. The fallout from the crash quickly spilled out into the legal world, and that created a whole new crisis for Fiserv to deal with. Almost right away, law firms started sniffing around, investigating Fiserv for potential securities law violations. And what that really boils down to is one simple question. Did the company lie? Did they make false or misleading statements about how well they were doing, which in turn caused investors to lose billions of dollars? One law firm, Block Leviton, didn't waste any time. They went public with their investigation and started calling on investors to join a potential class action lawsuit. So all of a sudden, Fiserv wasn't just fighting a battle on Wall Street anymore. Now they were facing a full-on war in the courtroom. All right, so you've got a collapsed stock, a massive corporate shakeup, and a lawsuit on your hands. What's your next move? For Fiserv, it was all about managing expectations. They had to bring their forecasts way, way back down to earth. And when I say back down to earth, I mean it was a drastic reset. The company basically took a knife to its full-year forecast. They slashed their prediction for organic revenue growth from around 10% all the way down to a range of just 3.5 to 4%. And yeah, you guessed it, their guidance for earnings per share also got a major haircut.
So all of this leaves us with the big question, right? Fiserv has a new plan, they've got new leaders, and they're facing a very harsh new reality. Rebuilding $30 billion of value, that's a huge mountain to climb. But you know what's even harder? Rebuilding the trust that was completely shattered in just one day. The story of whether they can pull it off, well, that's going to be a lesson for any company that flies a little too close to the sun.